everyone, taxes can be a confusing and intimidating process. Many people think that they're stuck paying a certain amount in taxes each year, but that doesn't have to be the case. With the right strategies, there are plenty of ways to minimize the amount you owe in taxes. In this video, we will look at a few tips and tricks to help you pay less in taxes. Keep watching to learn how you can reduce your tax burden and keep more of your hard-earned money in your pocket. On this channel, I will discuss the role of how to pay less in taxes. Stay tuned and thank you. Understand your tax deductions. One of the most important steps to paying less in taxes is to understand your tax deductions. Tax deductions are expenses or allowances that reduce your taxable income, which in turn lowers the amount of taxes you owe. To begin, it is crucial to be aware of the standard deduction and itemized deductions. The standard deduction is a set amount that is subtracted from your income based on your filing status. On the other hand, itemized deductions allow you to deduct specific expenses such as mortgage interest, state and local taxes, medical expenses, and charitable contributions. To make the most of your tax deductions, it is essential to keep accurate records and receipts of your expenses throughout the year. This includes tracking medical expenses, property taxes, and any other deductible expenses. By documenting these costs, you can ensure that you claim every eligible deduction. Additionally, staying up to date with changes in tax laws can help you identify new deductions that may be available. For example, the recent Tax Cuts and Jobs Act introduced changes to certain deductions such as state and local tax deductions. Understanding these changes can help you optimize your deductions and minimize your tax liability. Overall, understanding your tax deductions is a key strategy in paying less in taxes. By taking the time to familiarize yourself with available deductions, keeping thorough records, and staying informed about changes in tax laws, you can make sure you're maximizing your deductions and minimizing your tax bill. Take advantage of tax credits. One effective way to reduce your tax burden is to take advantage of tax credits. Unlike tax deductions, which reduce your taxable income, tax credits directly reduce the amount of tax you owe. This means that tax credits provide a dollar-for-dollar reduction in your tax liability. There are numerous tax credits available to taxpayers, and it's important to explore all the options that may apply to your specific situation. Some common tax credits include the Child Tax Credit, the Earned Income Tax Credit, and a Lifetime Learning Credit. These credits can help to offset the costs of raising children, low-income individuals and families, and educational expenses. To take advantage of tax credits, it's essential to research and understand the eligibility requirements for each credit. Keep in mind that some credits have income limitations or specific qualifying criteria. Additionally, make sure to accurately complete the necessary forms and provide any required documentation when filing your taxes. By taking advantage of tax credits, you can significantly reduce your tax liability and keep more money in your pocket. Don't overlook these valuable opportunities to lower your taxes and maximize your financial well-being. Consider contributing to a retirement account. Contributing to a retirement account is not only a smart financial move for your future, but it can also help you pay less in taxes. Retirement accounts such as a traditional IRA or a 401k offer tax advantages that can reduce your taxable income. When you contribute to a traditional IRA, your contributions are often tax deductible, meaning they lower your taxable income for the year. For example, if you contribute $5,000 to your IRA and you are in the 25% tax bracket, your taxable income will decrease by $5,000. This can result in significant tax savings. Similarly, contributions to a 401ks are made with pre-tax dollars, which means they are deducted from your paycheck before taxes are taken out. This reduces your taxable income for the year and can lead to substantial tax savings. Not only do retirement account contributions lower your taxable income, but they also offer the potential for tax-free growth. Any earnings in your retirement account are tax-deferred until you withdraw the funds during retirement, when you may be in a lower tax bracket. Deduct business expenses if you're self-employed. As a self-employed individual, you have the opportunity to deduct a variety of business expenses from your taxable income, reducing the amount you owe in taxes. To qualify for deductions, expenses must be directly related to your business operations. Examples of eligible expenses include office supplies, rent or mortgage payments for your home office, and professional services like legal or accounting fees. If you use your vehicle for business purposes, you may also be able to deduct a portion of your car expenses. Be sure to keep detailed records and receipts for all business-related expenses. It's important to note that you can only deduct expenses that were incurred during the tax year in which you are filing. As with all tax-related matters, it's best to consult a qualified tax professional to ensure you're following the rules and maximizing your deductions. Claim losses on investments. One way to potentially pay less in taxes is by claiming losses on investments. While investing can come with its fair share of risks, the good news is that you can use any losses you incur to your advantage come tax time. When it comes to investments, it's important to remember that not every trade or investment will yield positive results. If you sell an investment at a loss, you can claim that loss on your taxes, which can help reduce your overall tax liability. To claim losses on investments, you'll need to report the sale on your tax return. Keep in mind that there are specific rules and limitations regarding the amount of losses you can claim each year. Additionally, different types of investments may have different tax treatments, so it's crucial to consult with a tax professional or thoroughly research the tax laws and regulations that apply to your situation. By carefully documenting and claiming your investment losses, you can offset any gains and potentially reduce the amount of taxes you owe. However, it's essential to understand that investing should not be solely driven by tax savings. It's crucial to make investment decisions based on your financial goals and risk tolerance. Claiming losses on investments is just one strategy to consider when aiming to pay less in taxes. Remember to seek advice from a qualified tax professional to ensure you are making informed decisions and taking advantage of all the tax benefits available to you. Choose the right filing status. Choosing the right filing status is an important step in paying less in taxes. Your filing status determines the tax rate that applies to your income and can significantly impact the amount of taxes you owe. There are 5 filing statuses to choose from: single, married filing jointly, married filing separately, head of household, and qualifying widower with dependent child. Each status has its own set of requirements and tax brackets, so it's crucial to understand which one suits your situation best. For example, if you are married, filing jointly may often result in lower tax rates and higher deductions. On the other hand, if you are separated or divorced, filing as head of household may be more advantageous than filing as single. To determine the best filing status for you, consider factors such as your marital status, dependents, income, and eligible deductions. It may be helpful to use online tax tools or consult a tax professional for personalized advice. Choosing the right filing status can make a significant difference in the amount of taxes you owe. Therefore, it is essential to take the time to assess your options and make an informed decision to optimize your tax savings. Avoid tax penalties by filing on time and accurately. Filing your taxes on time and accurately is crucial to avoiding unnecessary penalties. The deadline for filing taxes is typically April 15th, although it may vary depending on certain circumstances. Missing the deadline can result in penalties and interest charges on the amount owed. To ensure timely and accurate filing, it's essential to gather all the necessary documents, including W-2s, 1099s, and other relevant tax forms. Keeping track of deadlines and organizing your paperwork can help you avoid last-minute stress and errors. Another way to prevent penalties is by double-checking your calculations and ensuring all the information on your tax return is accurate. Small errors can lead to problems down the line, so it's essential to review your return before submitting it. If you're unsure about any aspect of your taxes or have complex financial situations, seeking professional help from a tax advisor or accountant can be beneficial. They can guide you through the process, help you identify potential deductions, and ensure your tax return is filed accurately and on time. By taking the necessary steps to file your taxes correctly and on time, you can avoid penalties and maximize your savings. It's important to stay informed about tax regulations and updates, as they may affect your filing status and potential deductions. Being proactive in understanding your tax obligations can ultimately help you pay less in taxes and maintain compliance with the law. Thanks for watching. For more views and updates about how to pay less tax, subscribe to our YouTube channel and stay tuned.